Hey guys, welcome back. I'm Jeb Smith, real estate broker here in Southern California, and today we're going to do an update on the real estate market for September 2020. What's going on in the housing market since our last update? A lot of people out there are reporting that we're in a housing bubble, while you have people on the other side reporting that the housing market is on fire. So what is actually going on in the housing market? Today we're going to take a look at pending home sales and existing home sales for the month of July to give you an idea of what's happening nationwide with regards to real estate. We're also going to discuss how home prices continue to go up and up, even in the face of a pandemic, with unemployment numbers at record highs, forbearance numbers at record highs. How are we continuing to go up and up in price? And lastly, we're going to take a look at some actual statistics for Southern California. Why Southern California? Because that's where I live, and I realize a lot of you guys out there are in Southern California, so I want to provide some real statistics for you so that you know what is going on in the local housing market. Unfortunately, it's very difficult to pull this data from a nationwide standpoint, so I don't have access to the entire US, but what I will tell you is that I've had conversations with real estate agents all over the country, and much of what's happening here in Southern California is happening in all of these major areas across the US as well. So you can take this data and kind of use it in your area based on what you're seeing, but the reality is it's a lot the same as here. We're going to take a look at that towards the end of the video, but before we do that, I want to ask a favor. If you're new to me, new to my channel, it's all about real estate, helping buyers, helping sellers navigate the home buying process. I touch on trending topics like mortgage forbearance, as well as foreclosures and evictions. So if this is of interest to you at all, do me a favor and hit that subscribe button. And I encourage you, as you're going through the video, if you have questions, do me a favor, comment below. I always go back through them, address those questions, have a lot of correspondence back and forth with viewers, and often enough get ideas for new videos. So I encourage you, do me a favor, leave a comment below, and if you like the content, give me a thumbs up. It really helps with the algorithms and helps more people see the content and helps me accomplish my goal of helping buyers and sellers and educate you all with regards to the home buying process. So again, thank you for taking the time to watch. Let's get into it. Okay, so let's take a minute and look at the data for existing home sales and pending home sales. Now, as you can see here, the existing home sales data is up nearly 25% for the month of July. What does this actually mean? Well, it means that home sales were up 25% month over month. This is a huge increase, and actually the second consecutive month that shows substantial gains. Last month I think was just over 21%. So you have 21% back in June, 25%, close to 25% here in July. And what is existing home sales? These are properties that have closed escrows, existing homes, not new construction, across the United States. So this is a nationwide stat, not just here in Southern California. So this shows, properties are selling everywhere, not just limited to Southern California in the market that I'm in. But let's take a minute at pending home sales, because that shows what's actually going into escrow. And in here we see a 6% increase, nearly 6%, where they were expecting somewhere around 3.5%. So the market is showing really, really strong gains right now, and a lot of it has to do with supply and demand. As we've mentioned in several videos, supply is very, very low, not just here locally, but across the United States. That, coupled with low interest rates, is what's really driving the housing market, and we're going to talk about it here in a minute, why home prices continue to rise in the face of, high unemployment, high forbearance numbers, etc. And a lot of it, all of it, really has to do with supply and demand. So with that said, I'm going to put a graph up here on the side of the screen, and let's take a look at this. Now, this shows, the past and the present, if you will, with regards to buying a $700,000 property. Why do I pull this up? Because it shows the affordability versus a year ago, if you will. Now, rates weren't exactly 4.75 a year ago, but this gives you a really good idea of the affordability, some time ago versus now, and why you're seeing those price increases, those big jumps in price. It's because people can afford a lot more property. As you see here, when rates were at 4.75% on a $700,000 property, that gave you a principal and interest payment somewhere just over $2,900. And now you see where interest rates are today at 3.5% or 3%, some cases even lower, 2.5%. I've seen people get, a purchase money at 2.5%, even lower for VA loans and some FHA loans. And so that same property today is costing you $2,300. So a savings of over $500 just because of where interest rates go. And in my experience in working with a lot of home buyers over the years, most people care about the home payment, the monthly payment. They don't care so much about the price of the property. They want to talk to their lender. They want to find out how much property can I get paying $3,000 a month. And then that's how they decide what price range they're in. So if you took that same scenario today where, back last year where a $700,000 purchase price at 4.75% was getting you a payment just over $2,900. If you took that same $2,900 payment today at a 3% interest rate, that's an $875,000 property. So you're getting $175,000 more in property today than you were last year because of where interest rates are, that big differential in where interest rates are. Now keep in mind, it's going to require more down payment at that $875, and your property taxes and things like that are going to be higher because your purchase price is higher. But if you're merely looking at a monthly payment standpoint, you can see right here why prices continue to rise, why people are continuing to bid up homes. As promised, let's take a look at the numbers here in Southern California for homes going into escrow as well as listings coming on the market. I'm going to pull up data for Orange County as well as LA County. I know a lot of you wanted numbers for San Diego. Unfortunately, I don't have access to them. I can't pull them up. So I have LA County and Orange County, which should give you a pretty good idea of what's happening in San Diego. Our markets tend to trend pretty close to each other, so you can more or less assure what's happening here is happening there. It just might be a little bit different on the percentages, but at the end of the day, should look much the same. So we're going to pull up Orange County here and see what we have. Sorry here, guys. All right, so this is going to be Orange County. I'm going to start at the bottom of the graph here where it says listings taken. So these are listings that are taken month over month, year over year, compared to 2019. So you can see, as we started the year, listings were pretty much where they were the previous year. We were at 95%. February, the market was really starting to get some steam, and we were at 101%. So more listings were coming on the market than the previous year. But then COVID hit, and we started to see the numbers change. We were at 75% in March, 48% in April, and that continued down until we got to June, where we started to see it trend back, where listings were more than the previous year. And in August, we had a little bit less. Now, the data is from last week, Friday of last week, so the 28th. So as we end, today's the 31st, the numbers could equal the same, but we're pretty much 100% of where we were this time last year. The big difference is that when you look at open deals are deals that are in escrow. These are pending home sales. These are deals that are under contract. And what you can see is, I'm not going to go over month, but the year started off pretty strong. We were a little bit above where we were the previous year, but then we fell below, and then we came back strong. We were at 123%, 125%, 126%. So you have more or less less listings coming on the market and way high buyer demand, showing properties are going into escrow. So you've got, that's why home prices are continuing to rise, is because you don't have as much supply going on the market as you have deals going into escrow. Now I'm going to do the same thing. I'm going to pull up LA County here for you a minute so you can take a look at that one as well. So LA County is going to look a lot like Orange County. Again, I'm going to start on the bottom of the chart here. Listings taken. We started off the year at 91% of the previous year. Then in February, we came back 104%. And then as COVID hit, we really got hit there. Not nearly as many properties coming on the market, which is to be expected versus the previous year. But July and August really started to see way more listings coming on the market than the previous year. But at the same time, you've got buyers going into escrow. We're now looking at the top here. So, in August down at the bottom, you have 124% month over month from last year, August to August this year. But you go up the top here, 127% month over month in buyers going into escrow. So you have way more buyers going into escrow than you do listings coming on the market percentage wise. So that's why the market's continuing to move sideways to up. I expect that trend to continue for the foreseeable future. It's going to take months, years for that to change. It takes a long time to shift a market from a seller's market to a buyer's market. You need a big influx of property to come on the market. And what we're seeing right now is as more properties come on the market, it's just getting, taken up by buyers looking to buy property. So that's where we are today. And I'll continue to update you as we get new numbers. The lack of supply is going to continue to stay low, in my opinion, regardless of what's happening with regards to unemployment or the forbearance numbers. I'm not going to get into my opinion on that here. I've talked about it in other videos where I don't predict a wave of foreclosures coming, and I'll link to that video here just so you can check it out if you're interested in it. But the reality is that the housing market is going to continue to thrive as long as supply and interest rates both stay low. And there's nothing that says that's going to change for the foreseeable future. The Fed has already more or less said that they're going to keep interest rates low. And in order to change the market right now, you would need so much inventory to come on the market at one time in order to stall it for it to become a buyer's market. And what I'm seeing is when home prices or when homes come on the market and they're priced correctly, they're getting taken off the market very, very quickly because there's a lot of buyers out there wanting property. And as good properties come on the market, they're going to continue to buy it, and we're going to continue to have this problem until something changes. Now, a lot of people are reaching out to me via email, comments on videos, etc., asking me, well, is it a good time to buy? Well, here's what I will say. I'm a real estate agent, so I guess I'm always supposed to tell you it's a good time to buy based on everybody's observation out there. And the reality is it's not always a good time to buy. There are times where it's not a good time to buy. And I'll be completely honest with you right now. It's better to be a seller right now just because you have less competition. There's less available homes for sale. You really have, it's a seller's market, so you can really drive the market being a seller, whereas buyers, it's difficult. There's not a lot of property to choose from. You're having to put multiple offers on properties, so it's difficult to be a buyer. But if you're a buyer and you're looking to hold a property for 5, 7, 10 years, I don't think you're gonna look back and be mad. I mean, as you can see from that graph I did a minute ago, this graph right here, I'll link to it again above, you can see the difference in how interest rates affect pricing. So if house prices do pull back a little bit and interest rates go up, chances are you're going to have a higher monthly payment at a lower purchase price than you would buying today. So, there's a saying that says don't wait to buy real estate and wait. That's because real estate is a long-term investment. It's not something that you should be looking to purchase and in 2 years make more money and sell and buy a bigger house. That's happened over the last few years, but that's not the reality. The reality is you should be buying it to live in and enjoy where you live. And if the monthly payment makes sense, then great. I definitely think it's a good time to buy. But if you're stretching yourself, just trying to get into the housing market because you feel like you're going to miss out, then I would tell you to probably reconsider what you're trying to do. But that's my 2 cents on the market. But remember, again, all real estate is local. It's, Southern California might be a different market than where you are in, say, North Carolina or Florida or New York or what have you. So make sure you're talking to a professional out there. And if you don't have one, reach out to me directly. I'm happy to put you in touch with one, and they can talk about your market and help guide you in the right direction. But as always, I appreciate you taking the time to watch. I appreciate your support, and we'll see you again soon. Have an awesome day. Bye-bye.